the start of the new year, we often get a lot of questions on how do I start my own business. So Thirusha from Control Pro is going to take us through the basic steps of what you need to start your business in 2022. Thereafter, I'll do a short explanation on the importance of branding and logo design.
Hi there, I'm Thirusha, founder of Control Pro Business Development Specialists. I want to talk today about opening your own business. So you've decided to start your own business, and what do you need to do in terms of all the admin that goes with it and in terms of your responsibilities? So we will go through the critical factors that need to be considered at the outset before you really get going. So we're going to go through how do I structure my business, the responsibility to comply, and here we'll look at just three, being the Companies and Intellectual Property Commission, CIPC or CIPC, the South African Revenue Services, SARS, and the Companies Act of 2008 as amended. And lastly, we'll just tackle that. Please note that the content herein is for information purposes only. It is not intended as professional advice. Please consult us or your accounting professionals should you require advice for your business. To contact us, my email and website details are at the bottom of each slide, and you can feel free to email me as well. Let's get into it then with the business requirements according to structure. We're just going to look at three types of structures, although there are more, because these are the three main structures that we would look at. One is company. Okay, so in terms of CIPC, you will need to register on the business portal or the CIPC website. Then, on a year-to-year basis, you'll have to submit an annual return, which is just to basically tell CIPC that you're still in business. In terms of SARS, once you register your business with CIPC, you are automatically registered for tax. In other words, SARS will allocate a tax reference number to your business immediately once your business is registered. For SARS, you will have provisional tax returns that will be due every 6 months and an annual income tax return that is also due. These are the minimum requirements. It's important to note that companies are taxed at 28%, but there is provision for small businesses which get taxed between 0 and 28% dependent on tax profits. It's a sliding scale. So in order to be classified as a small business corporation, SBC, you need to meet certain criteria. And the most important of these is that you cannot be a personal service company. So in other words, beauticians, consultants, accountants, lawyers, all of us offer our services personally. So we are excluded, unfortunately. But if you are a wholesaler or retailer, buying and selling goods, then you will most probably qualify to be a small business and take advantage of those really good tax rates. In terms of the Companies Act, every company is regulated by the Companies Act. Okay, and this is just not even the tip of the iceberg. This is just at the outset that you would need to know and need to plan how you're going to do this. So every company is required to issue share certificates. So the share certificate is issued to every shareholder or owner of the company, and it will state the number of shares that that person holds in the company. Now, you can have multiple share certificates because you need to have one for each owner. You also need to maintain a share register. The share register is a document or a book that will document the activities of all the shares. And here you will record if one shareholder transfers shares to another shareholder, or one shareholder sells their shares, etc. So that all will be covered under a share register. The Companies Act also dictates that your annual financial statements will be due within 6 months of your financial year end. This is quite an important requirement. It has always been in the Companies Act, but no one really monitored it. And CIPC has just set a precedent and won a court case where they fined a company for not having their financials ready and published within 6 months of their financial year. So this is something that CIPC is now monitoring for sure, and it's something we need to take into account when we open a new company. So how would you do that? You would need to have your accountant already selected, and you can take care of your day-to-day capturing, etc., and then just hand over those accounting records to an accountant to compile your annual financial statements. That would be the easiest. In terms of the legal structures, here, the company is seen totally independent of the owner. So because of this, there's lower personal risk. As a result, your personal assets are largely protected. So in other words, if you have a claim against the company for any monies outstanding or for any liability that you could have incurred in a business, people would be hard-pressed to go after your personal assets. Going on to the next structure is a partnership with 2 or more people. So CIPC doesn't come into it, nor does the Companies Act. Here you will have to register individually for tax, and you will also be needing to do your provisional tax returns, which are due every 6 months, and an annual income tax return. Now, in a partnership, the individuals will be taxed in their personal capacities. So while one can monitor the activities of the trading organization on its own, when it comes to tax, you need to submit your individual tax returns. And because you are being taxed individually, your tax rate is also on a sliding scale between 0 and 45%, depending on the amount of taxable income you have. The legalities, please put in place a partnership agreement, because everybody starts off as friends, but a lot of people don't end up being friends after a while. So it's best to, at the outset, document your expectations of each other, what roles each partner would play, what they're in charge of, what they're responsible for, etc., and reduce that to writing. Because you're trading in your own name or own names, there are personal risks, because the company or the business is not separate from the individuals. So the personal risks are there, much more so than in a company. So if you were to incur liabilities, then the affected parties can go after your personal assets, such as your house or vehicles, etc. Lastly, we're going to be looking at a sole proprietor. So a sole proprietor is somebody who trades in their own names. So very similar to partnerships. In fact, it's the same, except here it's only one person who's trading as themselves, whereas a partnership, it's more than one person. Okay, so here we're going to do the same thing: register for business, register the trading aspect for tax. Okay, and then your provisional tax returns will be due every 6 months, and you'll be required to submit an annual income tax return as well. You'll be taxed as an individual, same as in a partnership, 0 to 45%, depending on the tax profits that you make. Your personal risks here are increased, just like the partnership. So you would have your personal assets being at risk, more so than in a company. So those are the structures that we're looking at here. You do get more, such as cooperatives and joint ventures, etc. But I think that goes a bit beyond the scope of this clip. As I said, the intention of this clip was just to help you consider factors before you decide what business structure you will operate as. Lastly, I want to go over VAT. It's important to note that VAT is only compulsory when turnover exceeds R1 million in a consecutive 12-month period. So it doesn't have to be a calendar year, it doesn't have to be a financial year, but any 12-month period. If your sales exceed R1 million within that period, then you are obligated to register for VAT. There is such a thing as voluntary VAT registration, where you can register if you have 50,000 Rand worth of VATable sales, and you can register voluntarily. There are several pros and cons of registering voluntarily, and it largely depends on the type of customers you have, the commodities in which you trade, and this can be discussed with your accounting professional, or you could give us a call as well. And we will go through whether it is beneficial for you to register or not. Okay. There is a very heavy administrative burden on those who are registered for VAT. And it's important to note that, because if you're not getting any benefit from it, then is it really something you want to have to deal with? The returns will be due every 2 months usually, and you will be obliged to meet the deadlines as they come. I just want to point out here as well that VAT audits are very, very common. So what happens is you submit your VAT return and SARS selects it for audit. Okay. Here, they do this at random, but they do flag taxpayers as well. So you can be selected for a number of reasons. And when they conduct their VAT audits, they require that you supply all your calculations for determining what your VAT would be. So the VAT that you can claim on goods that you purchase is deducted from the VAT that you earned on the sales that you've made. Okay, and the difference would be payable or refundable by SARS or to SARS. So when they do an audit, they will go through this and make sure that both figures are accurate. When they look at VAT that you've claimed, you need to make sure that you know which items or purchases that can be claimed on. So, for instance, your tea and coffee and cleaning materials, which are your office expenses, you cannot claim VAT on that. And the reason is because you are not, you're only paying VAT for what you sell. So if you're not in the business of selling boxes and boxes of teas and coffees and cleaning materials, then that's not your regular business, and that's not what you're paying VAT on. So you're not allowed to claim the VAT on that. What happens in a VAT audit is SARS may ask for the individual invoices as well, and they will go through and make sure that you were actually able to claim the VAT. Apart from this, there are certain VAT checks that needs to be done on a VAT invoice before VAT can be claimed. There are a number of things, such as the customer VAT number and the supplier VAT number have to be on there. Both parties' names and addresses need to be on there, and you need to show that it's VAT at 15%, etc. Okay, there's a number of checks there, and if those are not met, you're not allowed to claim the VAT on it. So in an audit, that would be disallowed, and SARS would revise your VAT return accordingly. And this is important because you don't want to be red flagged by SARS, because it would definitely trigger more audits as well. So we need to do things the right way from the start. So that is what I've covered there on starting a new business and the things that you need to consider. I hope that you found this very useful, and you can follow us on Facebook at ControlPro SA for more tips and tricks and advice, and more video clips to come. Thank you very much. Bye.
To explain business branding, I'm going to use an example. So one of our friends was opening a Thai massage parlor, and 2 days before the launch, he stopped at the office and wanted us to have a look at the designs. So once I've looked at the designs, it was an awkward situation. So do I tell him that the designs don't look nice, or do I just say it looks good? Because they were ready to launch the business in 2 days' time, and everything was ready for print. So most people come to us for an honest opinion, and we decided to tell him the truth. And we said, these designs don't look very appealing, and even the name, we then researched the name. So this one was Thai Massage, and then we realized that there's also another company with that name. So which would, when people are searching, they'd most likely pick up that company first before his new company. So we advised, and then the other thing we suggest is that the actual logo doesn't look very appealing, and it's not very memorable for people. So what we did was, we then said, okay, he's paid the deposit and everything for these designs. So he asked, what should he do? So we said, give us 1 day, and or 1 or 2 days. And I said, hold on with everything. We'll redesign everything for you. And so from this here, we redesigned this look for them. So you'll notice the pictures are more appealing, and even the pictures, pictures of the people are more it has a friendly, welcoming feel. And the logo, this is the logo that we designed, and the name change was changed to Naki Thai Massage. So it's unique, and finding it on searches and people remembering the brand, it made it much more simpler. And it obviously, if you ask him now if he regrets losing his deposit on this design and logo design, he'll definitely say not at all. And it obviously impacted the outlook of the business. It made it look more professional, more welcoming, and even the colors. So just the green, if you look at the greens here and the greens that we used, although it's green, just the shades, or the different shades of green, made a tremendous impact on the entire brand. So what I'm going to do is I'm going to do another video which covers our logo design process, and how we actually what you should look out for when branding your business.